Welcome everyone to episode, I lost track, of the Retire with Confidence podcast. I'm Nick.
And I'm Jim.
And we have a special guest here, JJ Savinsky from Savinsky and Company.
Savinsky and Company, yep. Our office is, in fact, just in the same plaza as Peak Wealth. We're just a few buildings down here.
Plaza. I like that. I like that. Same plaza. So JJ is one of our trusted CPAs. We're happy to have him here for the second time.
Yeah.
For those who are keeping track, JJ was here in July of 2019, episode 59. So like 100 episodes ago.
Time flies, man.
Yeah, it sure does. Back then we were talking about the 17 tax law changes and
yes.
As it affects charities like the standard deduction and such, which we can talk about later. But today, JJ's favorite subject. I do love HSAs. In fact, Jim started calling me Mr. HSA, but I like Mr. Roth better.
Yeah, I go back and forth between Mr. HSA and Mr. Roth.
But QCDs are...
What's a QCD?
QCD, so sorry for the acronym. It's Qualified Charitable Distribution. So basically what this is referring to, qualified meaning that's coming from a qualified account. An IRA and the CD being charitable distribution. So this is a way for people to donate in a tax advantage way. So there's a whole bunch of things that you'll benefit from by doing these. It sounds a lot more complicated than it actually is, which maybe this scares people because, hey, it's this fancy acronym. What is this way to donate? But it's unbelievably simple, and the downsides are absolutely minimal. The upsides are huge.
So it's something that's kind of new, right?
Newish, yeah, and it kind of emerged as a result of the Trump tax cut. Because before, the standard deduction was low, right? So people, hey, I donate money, I get a tax benefit. You listen to those car commercials for Mother Waddles, right? You're like, yeah, you get a huge tax deduction. It's like, you don't get crap anymore.
Can you sing the jingle?
Did they have one?
On the radio, I think they have.
But people think they're getting a huge tax deduction when they donate money. But if you actually look at your tax return, you're not getting much of anything, if anything, nowadays, because the standard deduction is so huge, and this specifically for married people.
Yeah, and that's why this became so important, right? Is when the standard deduction went so high, it took a lot of people out of. They didn't see the need as much.
No, it wasn't as important. It wasn't that prevalent. But now with this huge standard deduction, and then the other benefits that we'll get into, it's a no-brainer to me. I mean, I think everyone that's over the age of 70 that donates anything starting in the thousands, anything, should do this if they have an IRA.
All right, so let's say I'm 72. I have my required minimum distribution this year. I give $50 a week to the church or another charity. But normally I just write a check or it comes direct ACH out of my bank.
Yeah.
And I'm benefiting the charity, but am I benefiting on my tax returns?
No. Generally, and you guys stress the importance of being debt-free when you're older, right?
Yeah.
So I got an example here, a little bit bigger numbers, but this model will basically say you don't have a mortgage at 72, you're done. So the only thing you have for itemized deductions currently, you have charity, property taxes, and no mortgage. So that's it, charity and property taxes. Taxes are capped at $10,000, right? So that means anything above and beyond that is all you can get is charity. So if you're 72, give or take standard deduction now is about $27,000. So here's my little example. Someone donates about $20,000. Big donations, right? In a normal year, they donate 20, taxes are capped at 10. So no matter what they do, $30,000 is all they're going to get for itemized deductions. Even though you donated $20,000, you're effectively getting a tax benefit of $3,000. That sucks. You lose $17,000. Poof, nothing.
Right.
So this is where this QCD comes into play because you can say, how can I get a deduction for this? This is how, right here. So here's how it would work. You give Nick or Jim a call. You say, hey, I'd like to do a qualified charitable distribution. I'd like to write a $20,000. I want to do my donation to the church. So I'm going to take this $20,000 right from your IRA, goes right to the church. This costs the church nothing, absolutely nothing. There's no downside to the charity. And there are other ways to donate that people have been doing in the last few years, like stacking donations one year, Some churches get a little mad, but this is absolutely no problem for anybody. Not a problem for the people that house your money, nor is it a problem for the charity.
Because the church is just receiving a check, right?
Bingo.
They don't have to have a brokerage account where they're trading stock or
Yeah,
anything
you're not giving them Apple stock. Not to say it's a bad thing, because everyone can benefit from getting stock. We'll get into that. But
This is not a recommendation of Apple stock. Okay, full disclosure. And that I didn't even say it. It was JJ. Okay.
but this is administratively very, very simple. And it might seem complicated, but it is not. And if you mind if I shoot some real numbers, what this can save you?
Yeah, absolutely. That's what we're here for.
So this $20,000 gift that we were talking about. So if you just write a normal check to the church, you don't do this through a QCD, you're only going to get $30,000 standard or itemized deductions against $27,000 that would have been standard. So again, you're only saving $3,000. With the QCD, what's going to happen is your income is actually going to be reduced. That's what happens. Your RMDs go down. So now your income goes down by $20,000. Then you get that same standard deduction of $27,000. So instead of $30,000, now you have $47,000 effectively. So for someone in the 22% bracket, if you have the $17,000 savings plus state, which we'll get into, it's about $4,400 of tax savings by doing this in 1 year.
All right, I want to clarify because you said earlier you saved $3,000, but that's a $3,000 deduction, which the benefit's only 22% on that $3,000 in your example.
Now,
so it's like less than $1,000 benefit versus a $4,400 benefit.
Yes,
and that's the real apples to apples.
Well, actually, it's even more than that because my $17,000 savings was basically saying 20 less the 3 that you would have had otherwise. So this is a straight $4,400 benefit in year one.
A straight 44 plus maybe another 1,000.
Well, this is after the 1,000. So
Okay.
4,400 is your basic savings by doing it this way.
Just because you signed an Ameritrade form sending the church the money instead of having the Ameritrade money into your checkbook and then you write a check.
Absolutely.
That's interesting.
And now you save on your bank fees too because you don't have to write 52 checks. You write no check.
Those checks are expensive.
So you save $25. Yeah.
Remember the American Express commercials back in the day with Yao Ming? And he's like in the apparel store and he's like, "Can I write a check?" And they're like,
yeah.
I hate writing checks.
Absolutely, it's terrible.
Painful.
So now,
Preston might be too young to remember that commercial.
I mean, just like from a laziness standpoint, people are inherently lazy.
Right.
You only do this one time. You don't have to do this 26, 52 times.
Right, like Nick said, $50 a month. We're not doing it $50 a week to church. We're lumping it together and sending one big check out.
Yeah.
But
one time.
Look, when they pass the basket around at church, I feel good about dropping in the check. Right?
That's true. Yeah.
Because, I guess it's ego. Think, hey,
right.
I'm putting in.
Guy's
Right?
doing
Hey,
it.
you saw me, right?
He's doing
Like I
his
put
part.
in,
Yeah,
right?
He's doing his part.
Let's fill out some
And then,
envelopes.
but I never signed up for the ACH. I never signed up for the ACH because I'm like, well, when I take the basket, I just pass it on, and I look like
you're skipping on.
I look like I'm not putting in. You know?
You have to brush this out.
Am I the only one? Nick needs to know. Am I the only one who feels this way? If I do my QCD,
yeah,
just wink at the guy next to you. And
I'm like, look, I already did it.
We're good.
Tax advantage. It's okay.
Okay.
So to kind of give you some more benefits of this thing. So the one thing is, of course, this is a straight cash savings, $4,400. So you're talking 22% federal savings of $17,000 plus 4.25% state, which normally, by the way, itemized deductions, you get nothing for state. So part of that $4,400 savings is that you actually got a state tax deduction for this. It's a nice little benefit. But one of the other really cool things about this is there's a big, big difference between a deduction and a reduction of income. So by doing this, when your income goes down, your AGI goes down. So if you're one of those that are like right there in the Medicare bracket where you might jump a bracket, if this reduces your AGI, you might actually save on Medicare premiums.
that Medicare bracket is really painful.
It's terrible.
I mean, you're looking forward to Medicare for all these years, right? Where you're finally going to get a break on your healthcare costs, and then they jack you
Yep.
for an extra several $100s a month potentially.
Yes. And Jim alluded to a point earlier too, is that if you're one of those people that has a lot of Roth and your income is actually quite low in retirement, sometimes you don't get taxed fully on your Social Security. So if you do a QCD as opposed to giving, you reduce your income, you might reduce the amount of Social Security tax you pay as well. So Social Security is taxed at 85%, but if your income's lower, sometimes it's taxed at 0, 50, or some equation in between. If you get that thing down, you could actually reduce that too. So it might be even more powerful than what I illustrated.
I love the Social Security aspect of that. So many people are unaware of this whole Social Security tax mechanism, and by reducing your top line income, you could potentially pay less tax on your social.
Absolutely.
Yeah.
And unfortunately, that was when that was enacted back in the Reagan administration. They didn't adjust it for inflation, so it happens really fast.
Yeah,
so
it's like 36,000.
It's ridiculous. Hopefully, they address that at some point. But as it stands now, it's low. So, Mr. Roth over here, another reason why you want Roth is you keep that income lower in retirement. You might barely pay any tax on that Social Security if you're able to live off your Roth. But of course, you'll have RMDs. So here we are.
Let's talk about Roth for a second, because sometimes we find it cost prohibitive to do a Roth conversion because you might have a relatively low income, but then when you do a big conversion, it creates all this Social Security tax. Well, if you're lowering your top line income, maybe you could still sneak in a Roth conversion as well, above and beyond your required minimum.
You could utilize that. Hey, if my top line's going down, it gives me a little more room for a Roth conversion in 1 year. So if you're kind of right there in a bracket where you want it, I wouldn't mind converting 20. This gives you that opportunity to do so.
Right.
Now, last time JJ was on, July of 19, episode 59, we talked a lot about the standard deduction, which you led in with the $27,000 for married, final, and jointly, and the idea of stacking with charity, like doing a double dose 1 year and then skipping a year. But I don't remember if we talked about appreciated stock.
Yes.
So last year, our church started a capital campaign. Okay, like the fifth one.
That's about right.
So, yay, capital campaigns. So we decided to gift appreciated stock.
Great.
Okay.
Move.
It was great timing too, because it was like in November when the market was kind of peaking.
Yeah.
So I feel good about that. So how does that work, right? How did I benefit from that last year?
So donating appreciated stock is awesome. A lot of people don't even think about it. But if there is something where you have a ridiculously high appreciation and you want to offload it, like, hey, well, I can offload this stock, but then you pay the tax, right? By donating it, it's almost like it seems like a cheat code, but it seems too good to be true, but it's absolutely fine.
Like
so
up, down, left, right.
Left, right, A, B, start.
B, A, B, A. Yeah.
So here what happens is, for example, if you got a stock that's worth, or your cost basis is 50 and it's up to 1,000. So if you were to sell it, you pay $950 in capital gains. It's a killer. So instead of that, you say, I'm going to donate that $1,000 stock to the church. You get a tax deduction of $1,000 and you pay no capital gains. So now you just avoided, call it $200 in tax with that one donation. So credit as a deduction of that full $1,000 and avoid the capital gains tax. Absolutely sweet.
And then the church accepts the stock into the brokerage account. They immediately sell it and bring it into their
no problem
budget or into the fund.
Does not hurt the church. Does not hurt you. It's a win-win all around.
Yeah.
But like for someone like you that's younger, you can't do a QCD because QCD you have to be 70 and a half. This is a nice alternative.
Anybody can do this.
Anyone can do
Anybody
this.
But
it does.
In a taxable
it has to be in a taxable account.
Yeah.
You cannot do this out of a 401k or a Roth. It's
Right.
got to be done through a non-qualified.
Yep.
But one thing to never ever do: donate a stock you are at a loss. So I haven't seen this, but I've heard of some stories where if you were to just have sold the stock, you could take a loss. Don't donate the stock when you're like right now. Unfortunately, I would say everything is hurting.
Mm-hmm.
You better be at a gain to do this. Appreciated stock is the key word. So
And long term.
It's
got to be a long term.
Yeah.
Right. It can't be a short term. So if you bought a stock on Tuesday and it doubled by Thursday, that doesn't qualify.
Yeah, it's got to be long term.
It's got to be a long term gain. You got to hold it at least a year before you do that.
Yeah. Good point.
Thank you for that as well. So QCD and appreciated stock. I want to kind of bring it all together here now. Okay. So the example that you're going through with a $20,000 RMD. Okay. So picture that you're 72 and you have like 500,000 in your IRA, not 401, but IRA. So that 4% RMD on a $500,000 IRA is around 20,000, right? So that's the person that is kind of the story that you told. They're charitably inclined. They're going to give the money to the charity anyway, and then they're going to save this 4,400-ish number. Okay, they just have to change up the mechanism logistically of how they make the gift. That's it. Now, whether they were going to, who knows what they were going to planning on doing with their RMD, but it doesn't matter.
They had to take
because they had to take it, and they were going to give money from the bank to the charity.
Yeah.
So they're just kind of changing the circle of life here.
Right.
So now you don't have to take it.
It satisfies.
It satisfies you. So if your RMD is $20,000 and you donate the 20 to church, you don't have to take a single dollar now more out of your IRA. So now that bad boy can grow some more.
Right.
So keep it in there, let it grow.
So JJ, what I like about you, among many things, is that you are a CPA who proactively will bring this up to someone.
Yes.
In fact, back in April, a client of ours was down there at your office, and she drove right over here, or walked right over here, and said, "I need to take my QCD." And I was like, "You're soliciting us for the QCD?" I'm like, "This is great." She said, "No, JJ told me to do it." And I said, "We can do it right now. There's one form you sign, and that was it."
One of the problems, like HSAs, is no one talks about QCDs.
Yeah.
And it's frustrating because, and this comes from the top, whether it be from the charity itself, I think that should talk to their members, their parishioners, whatever it might be. There should be some conversation there. There should be more conversation from financial advisors. There should be more conversation from tax preparers. Like this is such a huge benefit, but unfortunately there's a little bit of lack of education on this topic. So getting the word out to me this hurts nobody except the federal government, which they're okay with. They pass a law.
I think that's a good point, though. Like if you're just average guy at home doing your own taxes, crunching through TurboTax, this isn't going to pop up.
No, it will not.
They're not going to talk about it and say, "Hey, you would actually save X amount if you give it directly."
Yeah,
to
and
charities.
same thing if you have a Vanguard account, they're not going to say, "Have you thought about utilizing a QCD?" This is where us as professionals need to educate our clients.
It's a good example of showing value. Right?
Absolutely.
You pay a fee, right? You pay a cost to do it, but I mean, in the example you gave, wow, you're way ahead of any cost that there would be in.
And even if that 20,000 becomes 2,000, if you gave a $2,000 QCD, there's still $400, which a tax prep fee is going to be probably less than that for a simple return. So there's still benefit.
Yeah. So you're covering your cost.
Exactly, so this isn't just for someone that gives 20,000. This is like I said, anything over $1,000 probably. At that point, it's like this is where this should be a conversation. And I would say don't do it where you give $50 to 30 organizations. I think that's going to be a little bit cumbersome. But if you anything over $1,000 to any charity, this is a no-brainer.
I agree.
Yep.
Any closing thoughts, gentlemen?
One thing, there are a couple things that this does. There is a few limitations to this. One is if you have a donor advised fund or private foundation, this isn't eligible. This has got to be to a 501c3, meaning a Red Cross or your church or someone that's a straight 501c3, which is clearly stated on their website or whatever it might be if you had to make a phone call. And it has to be out of an IRA. So if you have an old 401k at your job that they've let you float for 5 years, not going to work. You've got to have an IRA.
Donor advised fund reminds me the transition from a merit trade to Schwab, which we've talked about at length with people, 2023-ish.
eventually.
Schwab is the leader of donor advised funds, so I'm
Yeah.
really looking forward to tapping into that platform.
That is exciting.
Yeah, it is. Okay, so qualified charitable deduction, QCD.
Distribution.
What did I say? Deduction?
Deduction.
Qualified
Reduction
charitable
of income, not deduction.
distribution.
There you go.
Talking about appreciated stock, the standard deduction, Medicare taxation, Social Security taxation, Roth conversions. You got to take the RMD anyway, guys. Got to do it.
Yep.
Right? If you don't, you're in big trouble. So, JJ, thank you for stopping by. We
My
appreciate
pleasure.
the work that you do for us and for our beloved clients. And hey, if people aren't taking care of you for taxes, right? Where can they find out more about you?
You can find us at our website, savinskycpa.com. Of course, also you can just ask Nick or Jim, Preston. Happy to have a conversation. Even if you're not an existing client and you just want to learn about this, just give me a call. Shoot me an email.
Savinsky CPA.
savinskycpa.com. Yep. And it's happy to have this conversation. It's one of those things that I'd love just to educate people on them so they can tell their friends and tell their other parishioners, whatever it might be, how to take advantage of this.
Well, thank you for the expertise. We appreciate you stopping by today, and we'll see you next time.
My pleasure. Take care.
See ya.